There's some persistent FUD circling around Ripple and XRP. I've seen so many articles issued on this subject. We're going to dig into it and see is there any substance there. We got an update on Evernorth. That is the $1 billion XRP digital asset treasury. We'll dig into that story. We have a write-up by Grayscale where they're talking about the current market cycle. Is it nearing its end? Should we be worried that, well, it's all over Red Rover? We'll take a look at that report. Michael Saylor, Strategy, finally has a rating for its debt. Is this a safe place to put your money with Strategy in these various debt issuances? We'll see what rating the company got. And we have a couple things to get into. But before we do, today was the launch of the Zhao DAO. And we had really two issues that popped up here. It gives me a new respect for people that are launching things within crypto. First and foremost, there's a lot of action early and there was a rate limit. And so they're upgrading the API with XRPL Labs and some wallet. And so that should be up and operational here shortly. An announcement will go out there for those of you that aren't a member yet of the first DAO in XRP Ledger history. But secondarily, the X account. Now, this is only the X account. It's not the app. It's not the website. The X account has been compromised. So do not interact with that X account until you hear from Fabio or Santiago that it is safe to do so, because it's putting out malicious links and fake scams it's putting out. So someone's overtaken the X account. So make sure you ignore that. I'll let you know once that has been restored. I mean, it was a wild day. Again, first getting rate limited, and then secondarily the X account being compromised. Put that announcement on X. Hopefully everyone sees it. If you can on X, retweet that to make sure everyone gets to work, because we don't want anyone interacting with that account right now. But outside of that, we're marching towards that first goal of 1,000 Zhao DAO members, because then we can start doing proposals. And today on X, I put, there's really two things in my mind. They're small things, but I think they would be important for the XRP Ledger DAO. And that would be, I think the NFTs should have some cool artwork, because right now it's just attached to your wallet and it can be scanned by the system and tell that you are, a member. But I think it'd be cool to see an actual representation there that you're a DAO member. And secondarily, I think we need a place to speak, to talk, a community, whether it be a forum, a area to chat, Discord, something there where we can all congregate and talk about what are the important issues and what are the things we're voting on and things of that nature. Again, these are two things that the DAO itself aren't working on, but we can discuss and possibly put a proposal up and get it done. Just two kind of small things always kicking around. So let me know if you're interested in either of those two things, but just remember, stay away from the Zhao DAO X account until it's fixed up. Now let's take a look at this. We see, can XRP's price still win the long game, or will Ripple leave it behind? So we have this idea because Ripple's going into stablecoins and custody, and you got Hidden Road, all this stuff going on. And look, their whole company with payments and custody and all that, the whole business is worth approximately $15 billion, but they sit on almost $100 billion worth of XRP. Ask yourself that very simple question. Would you ditch XRP if you held $100 billion worth and counting? I mean, every dollar that XRP goes up, they make another $40 billion. Like, they ain't going anywhere. And we heard from Brad himself here where he says, look, they're locked in here. Everything, and I mean everything they do centers around XRP, and that's absolutely correct. They are not going to move away from this crypto asset because that is so much value. There is too much there for them to leave. These little other projects, I mean, they're big, they're multi-billion-dollar things, but they pale in comparison to the value of that XRP. And this next thing, I think, shows you where they're going to go. Evernorth, I've told you this. This is that new $1 billion digital asset treasury. We see it completes its 1 billion XRP purchase as Ripple celebrates price surge. Price is up a little bit. I wouldn't call it a surge, $2.65 at the time of this recording. But institutional momentum builds as Evernorth and XRP ETFs showcase growing demand. We know there's going to be demand there for the spot. But this is important for a couple reasons. Number one, it's just another way to invest in XRP. If you don't want to buy the spot ETF, but you still want to use your brokerage account and have someone custody the assets, well, this is another avenue to do so. And it's one that can grow your XRP per share over time. If you buy an ETF, that's it. That's the XRP you have minus their management fee every year. But with this, they're going to use various methods to try to grow the amount of XRP that one share represents. It's interesting. I don't know that I would put a whole lot of money into something like this. I'm not a huge digital asset treasury fan, but if done right and done with not excessive debt, and you have great strategies to deploy that XRP, that $1 billion in XRP, it could work well. But more importantly, we already know this. I've discussed this. The number one digital asset treasury of any cryptocurrency in the world is not Evernorth, it's not Strategy, it's Ripple. Ripple is the biggest one there is. And if this $1 billion digital asset treasury trades either at the spot price of its XRP or at a premium, then Ripple's going to go up in value because it also is an even bigger digital asset treasury, which has more avenues to earn off of its holdings. Well, it should be significantly higher. It can leverage a payments business off of that, a custody business off that. It lends, we already know Ripple lends out XRP, earns from there. It can participate, possibly have to do so through a fund, at least until regulations pass, but it can participate in DeFi. And there's just so much stuff that Ripple can do and not have to use excessive amounts of debt to do so. With wherever North goes, Ripple will go, but faster. And so I think that's the big deal here. When you look at why do we care as the XRP holder, well, when you look at them getting top-notch devs, they're going to want to earn stock, of course. A very valuable stock, high-growing stock, so that'll be good. We have more, skilled people working on this ecosystem. I think it just brings legitimacy to this whole space, and other people are going to want to be involved, of course. The more Ripple goes up in value, the more people you're going to want to jump in here and be part of this ecosystem. So this is a big one. This is a big launch. I think it sets the stage for an eventual Ripple IPO. And I think I've been saying for a while, it ain't going to happen. They ain't going to do it. Their businesses aren't ready. Well, first and foremost, if they traded a premium to their XRP holdings, they're ready any day of the week. They were ready years ago. So if they can prove that, you're probably going to see an IPO really quick. But further on, I think they're doing well with their stablecoin growth and their custody business, and payments are doing well as well. So probably next year we will see, I would think, a public, at least they'll do a public offering for Ripple stock. They may not need to actually do an IPO and raise more funds, but the stock may trade publicly. That's what I'm seeing, at least. That's the way I see it. We'll have to see it play out. Now, we see this interesting by Grayscale. Cycles don't die because of old age. So we're in this, oh no, the cycle has hit some imaginary time frame that other cycles have, therefore it's the end of the road. We see Grayscale saying 3 years after crypto market bottom, there's a renewed debate about the state of the cycle. But the factors powering adoption, macro demand for scarce digital assets, and improved regulatory clarity remain. So what they're saying is when we look at what is really driving values and adoptions, that ain't changed. That's only getting better. Just because we hit some arbitrary time since the bottom of the last cycle, that shouldn't necessarily mean that this thing's going to fall apart. We see the SEC's generic listing standards for crypto ETPs. So ETFs are going to go live here as soon as the government gets out of this shutdown. That's huge. The Senate made progress on market structure legislation. Again, crypto companies meeting with Senate Democrats trying to get this done. We had Republicans taking a lot of meetings as well on this issue. And there's more crypto IPOs, so we're starting full integration. From a return standpoint, the AI crypto sector dominated here recently. So we'll go over that as well. Pretty interesting. But this is what it is. Cycles are features of financial markets and are important factors for investors to consider. So we have this idea, oh, there's not going to be another cycle. Oh, yes, there will be. We know that. But it's not just going to be based on some arbitrary time, some magical time frame here. We see you have to consider that, of course, but there is no reason to think valuations will begin to decline simply because the bull market has lasted for 3 years. So just because we are 3 years past the bottom, it's no magical thing that just goes, okay, time to sell off. Doesn't work like that. Economic expansions don't die of old age. They're murdered by the Fed. In other words, a shift in fundamentals, usually a tightening of monetary policy designed to control inflation, is where we see the economy go under and a recession form. Like every bull market, the latest expansion in crypto valuations will end at some point. So this will come to an end. But the question is, are we there yet? Usually that deals with things becoming overvalued. You look at XRP, it's done some nice catch up. It hasn't hit growth. Ethereum ain't hit growth. It's not at new all-time highs. Things aren't in crazy town yet. To me, that's the number one thing. But further, adoption's increasing, regulations are getting better, ETFs are launching, like the things that are actually going to drive value. It's looking better. And just because we're some arbitrary time down the road doesn't mean you should give up on that. So keep an eye on all those important factors. And I think ignore the noise is kind of what they're saying here. And of course, they're saying there's still going to be significant drawdowns, even if we are in a growth phase. Most of them are from levered longs being liquidated, people getting too out of control with their leverage, and we saw that happen here recently. The sudden drawdown can be tied to the liquidation of long positions in perpetual futures contracts. 100% what happened. A unique feature of the crypto market structure, of course. Streamlined crypto ETF approvals. That's what we're seeing. That should drive a lot of value. AI sector standouts. From a crypto sector perspective, AI was the top performing market segment, driven by several standouts. The strong returns were primarily attributed to Near, one of my favorite theorists. Crypto Eddie and I are going to be doing an interview about Near here tomorrow morning. That'll be on Three Big Waves. On the X account, link down below. Follow that X account. That'll be a good one. WorldCoin, of course, that's not one I hold, but a big one in ATH. We see Near was founded by an AI industry leader. Near started out as an AI company and pivoted to blockchain. So they have a lot of knowledge in that sector. You can read through this. Again, it's over on Grayscale. We look at the different sectors. Artificial intelligence looks good. Bitcoin and currencies, to me, I combine those together. And with XRP, you get the currency function. It is a currency, but you also get some advanced feature sets. Same with XLM, right? You get some advanced feature sets there as well. What's interesting, smart contracts. Those are going to be big drivers of value once this thing gets in full steam. But right now, it ain't doing well, and it hasn't been doing well. And Ethereum sits right there at the top, taking the brunt of that. We just haven't seen a big breakout, but we will. Anyway, interesting article. Check that out. Now, S&P assigns Michael Saylor Strategies a B junk rating, citing Bitcoin risk. In the first ever rating for a Bitcoin treasury company, S&P 500 just rated Michael Saylor Strategy a B minus junk credit. S&P 500 ratings has assigned this B minus rating, placing it 6 notches below investment grade. In the report published by Bloomberg, stated that the rating reflected Strategy's deep concentration in Bitcoin. So that's all they got, right? They don't have a diversified bunch of businesses that are creating cash flows. So limited diversification, as well as concerns about liquidity and risk-adjusted capitalization. I think it's absolutely correct. According to S&P, Strategy is extremely vulnerable to changes in the market because of this significant exposure to Bitcoin. It's all they have. Its software business makes little money and provides little defense against a decline in crypto prices. So they can't just go, all right, we're going to meet all of our demands with our software company here. That's like a joke. The company reported $37 million in negative operating cash flows during the first half of 2025 and maintains minimal dollar reserves. They don't have a lot of stable reserves here that they can draw on if times get hard. Most of its treasury is tied up in Bitcoin. I mean, that's a feature for them, of course, but it adds risk. The agency highlighted liquidity and currency mismatch risk. So if we hit hard times, not only do they have all the regular problems, but they have a stock dividend they have to pay out of $640 million annually. If they can't go to the market and raise money, they're raising money to pay out on these preferred dividends. It's nonsense. And I'm still saying that someday, not probably while we're in a growth phase, but we're going to hit hard times, and he has to pay those dividends out. And he's just not going to be able to go to the market and get infinity money. Well, that's going to cause a really, really bad situation. And, they're going to have to liquidate, in my opinion, at some point in time. We'll see it play out, though. A lot of people say I'm wrong. Let me know what you think about Strategy, though, if you think it is a safe bet. Again, Zhao compromised account right now. We see this new Windows XP application stuff. That's just all. This post here is a scam. Again, everyone will let you know when that thing's up and running. Just don't click on anything at the Zhao account DMs you. Just delete it, block it if you have to, I guess. But should be up here and running here shortly. Just be careful. Lastly, we see this article, and it's written by Barnabas. I don't even know how to say that name, but Reynolds. But this is someone it's an attorney here from our buddies over there at Sullivan and Cromwell. And what he's saying is the cryptocurrency paradox. What you can't do is you can't have like a ton of complicated rules governing the actual blockchain itself because, well, it's global. It's decentralized. There's no one really to go after. You need to go after exchanges, on and off ramps, stuff like that to effectively govern this space within your own territory. But don't go after like the XRP ledger, of course. We saw how that worked out for the SEC, even though they were attacking Ripple. That was just a conduit to go after XRP, let's be honest. That ain't going to work. We have to adjust to a decentralized reality. And, I think that's kind of the way this is being approached. Sensible policies. We shouldn't just be a free for all for everyone to do whatever they want. But, you can't stop progress. You can't stop this industry. And you're not going to control decentralized technology. You go after the people within your territories that are operating real businesses. So lay the rules of the road for your Ripples and your Coinbases and stuff like that. And that's how you approach this. You don't try to, go after decentralized exchanges and self-custody wallets, things of that nature. So that was a pretty interesting write-up here at the Financial Times, and they're absolutely right. Whether I like Solomon and Cromwell or not, this attorney's hitting the nail on the head. We have to be smart how we approach this. Let me know what you think down below. As always, please like, please subscribe. The revolution will be televised right here on Jungle Link.